Rahul Arora now joins in, CEO of Nirmal Bank Institutional Equities. Rahul, hi, good morning. Two of your buy calls have done well post earnings. So just those first. One is Jubilant and the other is Procter & Gamble. But at current valuations, would you still be biased on these two stocks?
The call on Procter & Gamble is a little more tricky, Anuj. It's at about 42 times FY17. So can I ask someone to buy it at this price? I'm not sure. Jubilant, the simple answer is yes. I think Jubilant's results are very good. They surprised even us on the positive side, and I think we have the most aggressive target on the street on that stock. I think a 2% plus same-store growth was not factored in by anyone on the street. We still believe that the stock can give you about 1750 kind of a target with a 1-year horizon. If you start rolling over, and we're looking at the stock as we've discussed before from a 3-year perspective, then we think the stock would give you anywhere between 23 to 2500 if you're ready to hold it from a 2-year view. So to retain a very positive stance on Jubilant FoodWorks, the rationale still remains the same. I still think that return ratios will double from 20% ROE to 40%, and I still think the EPS will triple from $18 in this current financial year over the next 3 years to about $54, $55. On P&G, Anuj, I think the results were actually a little lower than our expectations. So even though the sales grew 18%, EBITDA grew about 30%, and we had a double-digit growth in PAT, we were actually expecting a 600 basis point improvement in the EBITDA margin. It came in at about 300, 350 basis points. But the stock is up about 145% since we initiated. But to come out and tell someone to buy it at 7100, I don't have the heart. But yeah, if you've been holding it,
so
I think
it's a target price on it?
We put it under review, Ekta. I think the results came out this morning. They were supposed to come out yesterday, so the analyst has not had a chance to roll forward his numbers. But so at present, we have, as of this morning, put it under review. But it'll at best be an accumulate. I can't see us putting a buy even from an FY17 on this one.
Okay. Before we get to a couple of other of your picks, Rahul, I want to ask you about the mid-cap pharmaceutical space, because that's really the flavor of today. Any stocks that you all are talking about or maybe propagating to clients at this point in time at current levels? And even Natco, which was a disappointment. What about that?
So I must confess that our pharmaceutical analyst left us recently, so we don't officially have the coverage. So from a SEBI standpoint, I would like to just state that the sector is not under official coverage right now. Okay. That being said, I think even though we have the sector under review, our last tilt, as we have discussed in the past, we have been positive on Natco. And if I was to make a statement on that particular stock, I think I would continue to recommend people buying it from a long-term perspective.
Okay. One more stock that you've been positive in the past, didn't come out with great set of numbers, was Bata. What's the call now?
So, Anuj, as we've discussed, even in the case of Jubilant, which was a non-consensus call at the point in time, I think great businesses are bought at times when things are not going right, and that's when price favors you. With Bata, Anuj, the issue has been, and we have done a lot of ground research on the stock, there are huge supply chain issues. So we've met about 30 odd stores in the last month and a half, and a lot of people tell us that the stocking doesn't happen as per their requirements from the parent or from the original warehouse. So I think they are now currently implementing SAP. They've hired Accenture to help them with the supply chain and logistic aspects. So I don't have any concerns on Bata. I think any dip should be used to buy. I still think this company can give you about 450 crores worth of free cash over the next 2 years, about 18-20% growth in top line over 2 years, and about a 30% growth in bottom line. So if you look at it on a CY16 basis, it's probably giving you about 26, 27 times. I would still value the company at 30 times and still look for a 20-25% gain on something like a Bata.
Okay. We interviewed the management of Triveni Turbine. They seem to have quite a firm outlook on their order book. How do you read the numbers? They weren't that inspiring for this quarter, but the outlook seems stronger?
The reason the numbers were not strong is actually why we're positive on it, and I'll explain to you why. This is a product company, Ekta. They basically make turbines, and the time to make a turbine and to dispatch it is about 6 to 9 months. So whatever order book you would have on the 1st of April on any financial year, or even through the first quarter, will get executed in that year. And Triveni does not dispatch its turbines till it actually gets an advance payment, which is why it's the only company in the capital goods space which operates on a net negative working capital, and that is phenomenal. It does 45% ROEs, ROCs, which no Indian capital goods company has ever done, and it's probably going to be generating 100 crores plus kind of free cash flow over the next 2 years. A company like this, I would value at 25-30 times. I mean, if you have a BHEL at 260, I don't see why this company can't get much higher valuations than a BHEL. On the results, I wouldn't read too much into it because orders can be very lumpy. So if you, on the conference call, the management said that some orders in Q3 where they didn't receive the advance payments, they will get booked in Q4. So you'll actually see the Q4 numbers get bumped up accordingly. We're very positive. We've rolled over numbers, and I think the analyst has a price target that's about 35-40% higher than the current market price.
Okay, you have two new stocks for us this morning, TD Power and Lakshmi Machine Works. What's the story here?
So TD is very similar to Triveni Turbines, Anuj, in that it's again it's a product company, though the time to make its products is a little lower than Triveni's is. It has three very good tie-ups on the hydro side. So basically it's a generator manufacturing company, and by FY17 it will probably be generating 85% of its revenues and 95% of its EBITDA from generators. In generators, it has, for hydro, it has a tie-up with White Hydro, and it has global tie-ups with Siemens and GE as well. The order book of this company is very strong. In fact, both on Triveni as well as on TD Power Systems, the game actually is on the export side because the margins for both are in excess of 40-45%. In Triveni, they actually do aftermarket sales also, where the margins are as high as 30-35%. But in the case of TD Power Systems, I think this is a company which my analyst thinks that the return on invested capital would go up by about 10-11% over the next 2 to 3 years. The EBITDA margin, which is currently at about 4%, will expand to about 11-12%. So there's a huge operating leverage that this company has. Again, a product company, but something that we really love. Our upside on the stock is about 55-60%. LMW, again, a company we like, has a 60% market share in textile machineries. Okay. India is looking to add about 7 to 8 million spindles over the next 3 to 4 years with a 60% market share. Again, debt-free company. We're looking at very, very strong numbers on here. Here as well, we're expecting the ROIC of the company to go up by 10% over a 2-year period. So positive, very positive on both those stocks. And
your target price from the level of 3,760?
I think, if I'm not mistaken, after the results, on current price, it'll probably be like a 25-30% kind of an upside.
Okay. Fair enough. Rahul, any disclosures?
So no personal holdings. None of my analysts or associate firms hold more than 1% in any of the names that we have discussed.
All right. Fair enough, Rahul. Thanks very much for joining in and talking to us. So that's some fundamental perspective coming in. Bajaj Electricals will be possibly one stock which is buzzing and adding to the broader market's gains today. They've won an order worth around 566 crores.
Okay, before we let Rahul go, actually, okay, I think Rahul, World Cup starts on Saturday, and we tomorrow, of course. Let's have a bet. What team are you betting on?
I personally think that Australia and South Africa will play the final if the format permits it to. And I think New Zealand will probably be the third team in the semi-final. And I know the fourth team, you will not agree with me. But Pakistan has a very good track record in tri-series, bilaterals and World Cups.
Okay, so I asked you to choose one team.
I think South Africa will win this World Cup.
South Africa.
I think so.
What about you?
India.
Okay, so South Africa, India, and I'm going for Pakistan.
Oh,
so
wow.
That's my dark horse. That's why I included it as my fourth team over there.
I think the best bowling attack will win the World Cup.
Y'all don't have any hopes on India?
No hopes on India at all because it's happening in Australia.
On a probability basis, what would it be?
I would say 10%, less than that.
And Ekta, actually, if you correlate this to the markets, you should actually go long on a stock when the entire team is bearish. No one's giving India a chance. So I don't know if that means that India will probably win it. But
why are not bullish on India?
Because performance has been very patchy. Yeah, I think we've been discussing it offline as well. It's
and frankly, I mean, it's happening in Australia and New Zealand. You would need a team that has the best bowling attack. Bowling will win the World Cup this time around. And I think Pakistan, South Africa have the best bowling attacks, maybe Australia as well.
I would concur with that.
All right.